Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Most people want to grow money, but many don't know which stocks to buy, when to buy, how to manage risk. So that's where mutual funds become popular. So today, crores of Indians invest through mutual funds using SIPs. But what exactly are mutual funds? So how do they work, and who manages them, and what is NAV, and what is SIP, and what are the types of mutual funds, and are mutual funds safe? So in this video I will explain everything about mutual funds from scratch. So keep listening until this video end, you can get some information, and let's go to the topic. And what is a mutual fund? A mutual fund is a pool of money collected from many investors. So this money is professionally managed and invested into stocks, bonds, gold, other assets. So simple example, suppose 10 people each invest 1000 rupees, so that total money becomes 10,000. A professional fund manager invests in that money somewhere else, like stocks, bonds, gold, other assets like. And why mutual funds exist? So not everyone has time or analyze stocks, like nobody have time because of they are doing job and they don't know and they don't have knowledge to analyze the stocks. So that thing mutual funds exist, and mutual funds help people invest professionally. And who manages funds? So AMC means assets management companies. So mutual funds are managed by companies called like AMCs, we can say directly. And example, SBI mutual fund, HDFC mutual fund, like that, etc. And fund manager means what? A fund manager decides which stocks to buy and which sector to invest in, and he analyze risk management as well. So that is the reason people invest in mutual funds. And one thing we have to know, so how mutual funds work. So step by step process. For first step, simple, investors put money into mutual fund. And step 2, AMC pools so money together, they gather money and they collected so money from who invested money. And step 3 process, fund manager invest in assets like what I said, stocks, government bonds, etc. And final step 4, and if investments grow, investor wealth may grow. If investment so fall down, so investor wealth also fall down, like that. So example, if fund invest in Reliance, TCS, Infosys, etc., and those companies perform well, fund value may increase, so like that. And one thing we have to know, so what is NAV? So NAV means net asset value. So it is a price of one mutual fund unit. So simple example, if total fund value becomes 1 crore and total units are 10 lakh units, so then NAV becomes 10 rupees, like that. And important point, and so people think low NAV does not mean cheap fund actually, and high NAV does not mean expensive fund. So we have to understand that thing. And now we have to discuss one major topic, so that is types of mutual funds. So first, equity mutual funds invest mainly in stocks. So because investing in stocks become higher risk also, we can say, because we don't know, we can't predict what happens. So if cases war events suddenly happens, so big news bad news comes in market, so automatically stock market and as well stocks will fall down. So that is the reason equity mutual funds, but higher returns as well we can get. So but potentially we can get a higher returns compared to other mutual funds. So examples like fund manager invest in like a large cap funds, mid cap funds, small cap funds, like that. And Debit mutual funds second. So invest mainly in government bonds, corporate bonds, fixed income assets. So lower risk compared to equity funds, but a lower returns as well, we can say, compared to equity mutual funds, because here like we can get a stable growth, and we can get a stable interest rate as well. So that thing happen in debit mutual funds. And now third, hybrid funds. So we have to know this is a mix of equity debit, so balanced approach, we can say. So here what fund manager makes here, fund manager invest in equity and debit, like what I said, in equity like large cap funds, mid cap funds. So like that manager can invest mainly in stocks, I can say directly. And now debit, we know, so government bonds, corporate bonds, fixed income assets, like that. And fund manager can invest. So basically who are beginner, so hybrid funds is the best option, because if something falls down, like any sector or stock, so another can, government bonds and corporate bonds can recover, and it maintains balance, I can say. So that thing happen. So hybrid funds is the best option as a beginner. And now we have to talk about a fourth one, index funds. So this follows market indexes like a Nifty 50, Sensex, so no active selections. So actually what happens here, so a fund manager, instead of buying all stocks, all companies, so it we don't know so which company gonna make a profit for upcoming years or for long term time. So a fund manager can invest like indices, so total, instead of buying all companies, so directly he buy some Nifty 50 indexes like Sensexes. And so they can indirectly buy like through ETFs and like that. And so no active selections here there. And now we have to talk about a fifth, sectoral funds. So focus on specific sector. A fund manager mainly specific sector. Suppose you invested in sectoral funds, a fund manager focus. Suppose you invested in IT, so definitely he focus on IT companies. He will invest in IT only, like that happen. So not only IT, banking, pharma, and consumer products, and something etc. We can say directly. And higher concentration risk. So higher risk also there. And now we have to talk about what is SIP. So many times you heard about SIP. So SIP means systematic investment plan. So how SIP works here, so you invest a fixed amount regularly, so like a weekly, monthly, so like that you can invest through SIP. So it is a one of method of mutual funds, you can say. And now example, so invest, you can start with a 500, 100, so 2000 every year, like that. So every month, so like that. So what capacity to invest, so what capacity you have to invest, you can invest that much. So if you wanted to start 10,000, yeah, you can start like that. And why SIP is popular, so easy investing habit and rupee cost averaging, so disciplined investing, affordable for beginners. So that is the reason people can follow that method in mutual funds. And we have to know, so one advantage also there. And so we can say that is what is lump sum investment. So you already heard about in YouTube ads or somewhere else, so lump sum investment, because you can invest at once. So lump sum means exactly definition, one time large investment. So long time or large investment also, we can say. And example, you invested 1 lakh at once, and other else you can invest 2 lakhs at once, so based on your so opinion. And now we have to talk about a difference, SIP versus lump sum. And SIP regular investment, lower timing risk, and lump sum one time investment, high timing risk as well. And finally we have to discuss benefits of mutual funds. Professional management. So first, expert manage investment. So actually what happens here, so fund manager can invest in multiple places, what I said, gold, stocks, bonds. So your money will be diversification happen, so that will always give you some returns at of end of the day. So that is a thing happen, so that is a good thing, benefit also we can say directly. And second, so diversification, so that is what I said. So money spreads across many assets like that. And third, beginner friendly, so easy for new investors. So those who are beginner, so you can start with SIP, so that is the best option. Start with 100 rupees, that is the best option to start. And fourth, small investment also possible. As I said, you can start with even 100 or 500 SIP. And fifth point, liquidity, so most open-ended funds can be remedied anytime. So these are the 5 benefits of mutual funds. So these are the reasons or benefits people can attracted there and they can invest. So no need to analyze the stock market. And so if employees don't have time, you can start with the mutual funds. So that is the best option as a beginner and who don't have time, so that thing is good. And now we have to talk about risks in mutual funds as well, because people think only mutual funds give high returns and stable growth, but sometimes it not guaranteed. Mutual funds also are not guaranteed because of risks include like market crashes, sector downturns, interest rate risk, fund manager risk, and wars, events, so like that happen. So actually mutual funds are also not guaranteed, so important. So mutual funds are subject to market risks as well, so that point we have to understand. So risk is anywhere. So if you are investing in stock market, definitely risk also something there. And now we have to talk about expense ratio. So expense ratio meaning what? So AMC charges small fee for managing fund, so this is called expense ratio. Suppose if your money they are managing, so they making money grow, so that thing, so they take charge from you. So how much invested, so based on that, so they take charge. Example, if expense ratio is 1%, so small portion goes towards fund management cost. So like that thing happen. And now we have to talk about direct funds versus regular funds. So direct fund, no distribution commission and a lower expense ratio. And now a regular fund, so includes commission, higher expense ratio, so that thing majorly. And now one thing we have to discuss, that is major, and how returns are generated. So mutual funds returns mainly come from stock price growth, bond interest, dividends, market application. So these are the mainly income or mainly come from, so returns only we can say directly. And so finally, so that was the complete beginner friendly explanation of mutual funds. Now you understand so what mutual funds are, how SIP works, NAV means what, and types of mutual funds, risks, benefits, expense ratio, direct versus regular funds. So these are the topics I covered in this video, so I hope you understand. So if you found this video useful, like the video and subscribe to Keshav Money Talks, and comment below if you have any doubt about finance or finance related. So you can comment below, based on comments I can do the videos, and you can comment as well which finance topic you want next. And see you in the next video. So thank you and Jai Hind.